Time for our On the Radar segment, a closer look at what money managers are watching in the markets. Andrew Pyle's with us today, Senior Investment Advisor at CIBC Wood Gundy. And what's on your radar, Andrew, is the TSX, the Canadian stock market, which has been outpacing the U.S. market like some international markets so far this year. What do you see?
Well, we think that outperformance will continue, John, albeit, we are at very lofty levels on not only Canada, but the U.S. as well. So we do think that we're going to see a fade in this market over the near term. But beyond that, we still think the fundamentals for Canada support an outperformance in the TSX. We've seen, obviously, materials doing very well. Energy's done extremely well, and obviously we'll get a lift from what we have recently seen with respect to oil prices. But I think we're seeing other segments of the market do well, and that would include the consumer sector. We think utilities do well. So, compared to the States, 12 months ago, we would have said the opposite, that the U.S. was the market that we wanted to overweight, probably underweight Canada based on fundamentals. I think a lot of that, John, has switched around, and I think in favor of Canada. We do think productivity improves going forward. We've got a tailwind of lower interest rates, or lower than the States at least, which is going to give us some support going through the summer.
Okay, that's interesting, because as you were first talking, I thought you were just implying the fundamentals for certain commodities and trends. Obviously there's been a lot of interest in power sources around the world, which helps out utilities. And then when you do the math, energy stocks, gold stocks, and utilities make up more than 30% of the TSX. But what is it you're seeing in the Canadian economy? Because I think there's a lot of people who are worried about the Canadian economy right now.
Well, the concerns are real, John, right, in terms of what we're dealing with respect to the States. And, we get events like this over the weekend, and we tend to forget about what was happening 2 weeks before. And, we're still dealing with a massive trade issue with respect to the United States and Canada. Now, coming into the weekend, there was hope in the market that we were approaching a deal with the States. The 30-day window has been thrown out there. Whether that's true or not, we'll have to see. But I think there is genuine belief that we're going to get out of this with perhaps less pain than what we thought back in April. It doesn't mean we get out of this unscarred, but I do think the Canadian economy can weather this, get through it. And again, from a market point of view, have those fundamental supports in place in the second half of this year that support the valuation we see now. Again, I think the markets can probably come off a bit here, but I think overall, I think the TSX is well supported.
Interesting. And then do you anticipate then some continued outperformance for some of the global equities that were also doing better than the S&P 500 this year? If sort of you're seeing the potential outperformance for the TSX versus the S&P?
Yeah, exactly, John. And this is what we talked about in the previous segment, was what was happening before the last week or so. And what was happening was a reallocation of capital globally away from the States and more to other markets, which is why we're seeing the European market do as well as it has. We're seeing stronger growth fundamentals coming out of Europe. And again, 12 months ago, very few people would have felt comfortable putting a decent weight in their portfolio into Europe. The economy was seen as weak. There were political issues. And yet again, we've turned that around. And there will be the devil's advocate argument, John, that, well, this isn't going to last forever. It could fade away very quickly. But, once we get out of whatever we're in right now, hopefully soon, we're going to be back to talking about other issues. What is happening with U.S. fiscal policy? What's the direction of the U.S. dollar? Is there the potential for the U.S. bond market to continue to weaken, which, again, I would say is actually supportive for gold? So we're going to come back to those longer term concerns in the market once we're through what we're going through now.